Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 28th of January, 2023, and this is the weekly technical analysis for the euro, the cable, and the Aussie dollar for the first week of February. And this week is going to be a very super intensive week with three central banks announcing their rate decisions, and as well as the non-farm payroll report from the US on Friday. So this is going to be a highly volatile week, and as you can see across the major currencies, well, at least for the euro and the pound, it's just been consolidating and just waiting to set up for this coming week. It's only the Aussie dollar that has managed to push up higher. That's thanks to their higher than expected CPI figure on Wednesday. But let's start with the euro. And it's trying to reach the 162 Fib extension at the 109.45 area, but just still flirting with it and hanging around just below that. Hit a high on the Monday of 109.27, and then on Thursday just 109.30, and that's about as close as it could get. And this 162 Fib also aligns with previous swing low and swing high here. That's from early last year, so just about a year ago, where it has finally climbed back up to trying to reach that level and retest that level. But it just consolidated for the week within a very tight less than 100 pip range for the week, so that's very tight last couple of weeks. So the resistance is still intact, and we could actually perhaps move the potential resistance another step higher with this coming week, starting with the FOMC on Wednesday and then followed by the ECB on Thursday. So the ECB is expected to raise interest rates by 50 basis points this time as well, and increase that overall interest rate to 3%. And then probably expected to raise rates by another 25 basis points for another couple of rounds, and analysts expect it to hit a terminal rate in May and then pause in May. So we shall see what they report or what they announce on the Thursday. So that's going to be critical on where the euro is going to move, whether it's going to be hawkish, where it could then attempt to hit the 110 round figure. But if it's not as hawkish, then it's likely to just be neutral or perhaps retrace lower. There's a clear support now at the 138 Fib extension that's at the 107.70 area. And well below that, there's a very strong support, of course, at the 105, where the daily 200 is sitting at as well as a swing high. So that's a very key strong support. That's well below, so it's unlikely that it's going to be that dovish. So it's likely to be a strong support here above the 107 and either consolidate between the 2 fib extensions here. However, if it's really hawkish, then there is a possibility where it could try to punch through the 162 and just to grab the 110 round figure. There's a key psychological barrier there. And also depends on what happens on the Federal Reserve's decision the day prior, where they are expected to reduce their interest rate hike from 50 basis points down to 25, and pushing up the interest rate to 4.75%. And also needs to see what their terminal rate and what their expectation is for the rest of the year, or at least the first half of the year, where there could be another quarter basis, 25 basis points increase after that in March, and to try to get to 5%, and then we'll see what they decide after that. So yeah, if it's, even if the ECB is very hawkish, it's very tough to break through the 110 and break out higher. That's going to be a very tough ask indeed. We'll see after this week's announcement to see if it's able to crack through, and then we'll define the next resistance, if at all. And on a weekly time frame, it closed as a doji, so not surprising after a spinning top and a doji, although it did climb up higher somewhat, and then stayed neutral for the week. And the weekly 200 is at 111.30 area. And there's which aligns with this. I can mark this support zone here now, which is actually the resistance. And that's right across and in confluence with the weekly 200 EMA as well. So go back across. That's where the swing low was, and broke down, became resistance, and it's now going to be a strong resistance. And that's at the coincides with the weekly 200 EMA as well, 111.34. So that's going to be further down the road, if at all. And if it does crash through even higher, break through higher. Right, but I don't think so for this coming week. I think 110 will be a strong resistance there. Let's move this up to the 110. Okay. Intermediate, that's the 162, but it's almost there already anyway. So let's see what happened with the US dollar index to see whether it's also a tight consolidation range for last week. And here's the US dollar index, the DXY. And yes, it has also consolidated for last week, in fact, the last couple of weeks, but even tighter for last week. Range is only less, about 90 pips for the whole week. So very, very tight, and all waiting for this coming week. Potential explosive moves from the Federal Reserve with announcements, decisions, and as well as the ECB and the BOE. So that's going to be three central banks that could trigger these three major currencies to create a high volatility here. And of course, on Friday, there's also the non-farm payroll report. So the DXY was not able to climb back up above the 138 pip extension. Resistance is still up higher at the 103 area, and support is still holding. That's at the 101 level, and below that is the major support at the 100 round figure. So there is room for any potential weakness from these announcements, where it could trigger a bearish move and a dip into to hit the 100 round figure. There's always that possibility where it could just take a dive just to spike through the 100 before taking a bounce back up. Or otherwise, it's just a minor dip and then attempting to recover. We'll see if it's able to recover at all to 103. It needs to recover a lot more to gain further ground, recover further ground. But the potential bearish move could be halted with this round figure, and also it coincides with the 162 extension of this move lower. Okay, so very critical week this coming week for all the major currencies, with the three central banks reporting. And there's in the second half, from Wednesday afternoon US time onwards, there's going to be a lot of volatility, so do be careful. And on the weekly time frame, yep, 2 weeks of dojis here, or very small spinning tops. So yes, it could go either way. Could be a continuation, bearish continuation move lower, or it could be a smart reversal move back up here. And again, the 103 is the potential target. That's and if it does climb up higher, that's the weekly 55 EMA coming down for at a dynamic resistance. All right, so let's move back to the other major currencies. Let's continue with the cable, and also very narrow range trading for last week, slightly better than the euro. It's about 170 pips range. Did test the swing high, recent high, and at the 124.46 area. Dip lower, recovered back up on Wednesday, and then closed neutral for the week, and managed to still find support from this swing high area. That's the 123.44 area. So it has not been able to test the 124 125 round figure yet, but it's just biding its time until this week's Bank of England's rate decision. Key support, or at least the interim support, is at the daily 200 EMA, as well as the 21 fib retracement. It's down to the 121 20 to 30 area. Major support is still at the 38 fib retracement. For all this swing move up, this is the retracement back down. So all setting up, waiting for this week's critical announcements, both from the Federal Reserve and the Bank of England. So expectation for the BOE is 50 basis points increase, pushing up the interest rate to 4%, and a possible 25% basis points increase in March as well. So, and hoping that that could be a terminal rate there at the 4.25% area. So it depends on what the announcement is going to be like for this coming week. There is also support from this rising trend line. If it does try to, if the BOE is sounds hawkish, then there could be a spike through the 125. Otherwise, if it's a bit dovish, then it could find support at the trend line and then stay neutral. Unless it's very dovish, then it could dip lower all the way to retest the interim support level, support area. So it will depend on their not just their decision, but also their forward-looking assessment where the terminal rate is going to be. And this is going to be right after the Federal Reserve's decision, so expect high volatility on the Wednesday and then the Thursday as well. And of course, the ECB is also announcing just after the Bank of England's announcement. So do be careful with all these three major pairs and their crosses. Either trade their crosses as well. Right, on the weekly time frame, close as a doji, but it's attempting to push up higher with support from this rising trend line. The weekly 55 EMA as well, providing some support. And if it does push up higher, there is this swing high area that was extend further back. It was a swing low previously in 2020, and that's at the 126.75 level. And that could provide an interim, another key resistance. Don't think it's going to go all the way to the weekly 200 EMA. That's well over to the 129 area. So let's see if it really does break through the 125 and it's very hawkish, then it could attempt to try to hit the 126 and above. Back up to this swing high area. Before that, there's also some interim resistance, 125.90. So yeah, just at the 126 area. All right, so let's move on to the Aussie dollar. And the Aussie dollar has really broke through the 70 round figure and continued higher for the week. So it's the one that has moved the most for last week, with the higher than expected CPI figure on Wednesday, which could trigger a potential higher rate of increase for the RBA the following week after next week, where they're potentially going to continue hiking rates, and just a matter of what quantum. All right, so this is now an intermediate support level. So this area here is at the 168 is now going to be a strong support. That's from the 68.40 area. Interim resistance now is already hit the 162 fib extension, 71.22. And right above that, there's another swing low, as well as a swing high area. This already coincides with this recent swing high. So right above that, at the swing low area at 71.65. And if that breaks, then there's the next key resistance above that. It's at 72.63. Oops, sorry. 83. Okay. And the 200 fib extension is all the way up to 73.20s area. So we could add a 73 round figure here, just for reference. Okay, so the RBA will only have their meeting the week after. So next week is exposed to the Federal Reserve's rate decisions and volatility price action after that. And let's see if there's any major moves from from the recent move up. There could be a retrace back down, and the support is already at the round figure of 70 on the weekly time frame. You can see that it's already, after a bullish move, it's already just almost hitting the weekly 200 EMA, and that coincides with the next range resistance, which we just drew this recent swing low, or the last year's swing low here. So there could be some pullback for next week. All right, so do check out my other videos on spot gold and dollar yen, and have a safe week with all this high volatility and high impact news events. Do stay safe, have a good trading week, and cheers for now.